my god, my poor Tesla stock is down 20%. Oh no, wait, all of my stocks are crashing. And can this be explained by another pandemic or another financial crisis? Absolutely not. So how can this be even explained? Take a look at my analysis board this morning, guys. We need to get to the bottom of this. I will provide you with an explanation of what is happening and my personal strategy to tackle this. Firstly, let's take a look why market is crashing in the first place. When there is a crash, this must be caused by something. In this case, a stock market is in what can be considered by experts as a healthy correction mode. Coronavirus is the initial reason why the US economy was brought to its knees. Now, after vaccinations are ramping up, the economy will slowly get up to where it was. The investors that of course predicted that the economy would get back from its knees may have hit the roof at this point, as the stocks have not just recovered, but even increased more in certain cases. Also importantly, the stocks that have been crashing the most have mostly been tech related stocks such as Amazon, Tesla, Facebook, Alibaba, Baidu and Zoom, while other companies such as American Airlines, United Airlines, Delta, Marriott Hotels, Goldman Sachs and ExxonMobil have been doing just fine. This is not typical for stock market crash, as most stocks would be affected, not just one sector. So why are the tech stocks crashing then? Most likely this is due to what I would call a Bitcoin fever of everyone jumping on everything related to tech. Since we know information is the new oil, tech companies have possibly had natural growth as a result of well performance. People then started mass investing as they were afraid of losing an opportunity to be a part of the ride. Just take a look at the Google, right? I remember when there were discussions of whether Google would ever hit $1,000, then in almost as little as 1 year after they jump up to $2,000. They were not alone. Apple, let's take an example of Apple, were $44 a stock just 2 years ago. Now they peaked recently to 132, a triple increase. So not that they are only considered well-established brands that will probably never go bankrupt, but they are also signalizing a never-ending growth that people must start to ask themselves of whether if they are stupid not to invest in them. This is what caused these stocks to climb incredible amounts in such a short time. This probably with a combination of spare time last year and why more and more people have gotten into investing. One more reason is that investing have become far more available to people, and a big reason for that is Robinhood.
Millions of new investors, many of whom are bored, isolated, and out of work because of the pandemic, are buying like never before. 2020 has been a banner year for all brokerage firms, but the broker of the moment is Robinhood. Named after the fictional character who robbed the rich to feed the poor,
Robinhood has made investment as easy as click for a very low fee, and also giving the potential for clients to buy a fraction of shares instead a whole share. For example, you don't need a $3,000 to buy a single Google stock, since now you can just buy a fraction. Robinhood also doesn't require you to have any money to open an account. It offers free trades, and in addition to this, they offer pretty good deals, such as free stock in certain cases.
You ever think about trading stocks? There's always been a cost, usually up to $10 for every single trade. Until now.
Today, free trades are the industry standard, but that wasn't the case until last year.
I will probably make another video on Robinhood, but in short, young and experienced buyers with no experience in investing are now trading stocks like never before. And as we know from the GameStop stock, the masses of people have a much longer impact on the market than some individual investors or even companies. Therefore, it is not a result of a rich investor or something spectacular like Tesla, which popped up in 2020. This is simply because a mass of people believe so much in Tesla and Elon Musk to make the stock prices go wild. Take a look at the Hertz stock graph as a funny example of what happens when inexperienced buyers go on Robinhood like it is a shopping mall. Hertz was doing poorly and reported so in their financial quarterly report. People, however, saw the drop of Hertz as a bargain and starting to buy Hertz like crazy. And do you think that the stock acted like GameStop and made everyone rich? No. From July, the stocks has just performance worse. And this, guys, is why you need to at a very least educate yourself before you will all get Robinhood fever, okay? So let's go to what is going on in the whole market. Is what has been going on the last few weeks a crash? No. Instead, it appears to be an indication of a stock market running a bit too hot lately due to heavy investing, and therefore this is slight pop to the balloon. Therefore, it is more of a market correction than a crash, as these stocks should never been valued so high in the first place. This is, guys, Elon Musk's opinion on his own stocks. Tesla stock price is too high. Dude, I just lost $10,000 because of this tweet. What the on with you? Alright, so let's talk about me and my strategy. As some of you know, my portfolio consists of many tech stocks such as Google, Apple, Microsoft, Disney, and so forth. Should I sell before it is too late? No, guys. I have lost quite substantial amounts of money lately, but remember, I have more than 20 stocks in my portfolio. Not all of them are tech, so I have been doing just fine. Secondly, I did not invest in these stocks for a short term. I invested in them to be kept long term. As Warren Buffett says himself, he is considered one of the best, if not at least the most famous investor of all time. He doesn't know if stocks will go up or down a day. He doesn't know if they will go up or down a month or even a year. But what he does know, that the stocks will always go up. He much prefers if the stocks are going down, as he can then get it for a bargain. Of course, not like Hertz though. He makes the simple statement that companies will never go away, humans will never go away, plants will never go away. The country will grow in value over time. Now, who gets that point is another question. This is exactly what my long-term investment strategy is based on. I invested in stocks of the companies that are, for the most part, the biggest businesses or the top of the food chain, and they will never disappear. A miracle guys, would have to occur in order for them to disappear, right? Therefore, my investment in Microsoft, Tesla, Apple, and so forth, they will really only reach the bottom if US does. And United States is not looking to go down anytime soon. So guys, if you have invested into what can be considered a tier 1 company, don't be, guys, afraid. Don't be afraid, and I say it again, don't be afraid of a little shake in the market. If you, however, heavily invested in tier 3 or lower, such as penny stocks, then I cannot make any guarantees for you guys. I am doing day trading myself and I know the risk. Day trading And penny stock investing is far different than a long-term investment. And guys, this is not advisable unless you know exactly what you're doing. I will make another video about this topic later on. So guys, to sum up, hold your horses. Nothing bad is happening. It is a mere market correction. Invest responsible and only with money you are willing to lose. Although I have been involved in investment for a few years now, I consider myself a freshman and I have a long way to go. Please guys, feel free to join my investment journey by subscribing to my channel and sharing your stories and the strategy in the comments below. Thank you guys so much for watching this video. I hope you learned something. I see you in the next video. Bye!